few
This
moments.
conference will now be recorded. This conference will now be recorded.
With Construction Employers Association, we're pleased that you're able to join us this afternoon for another one of the CEA weekly webinars. We continue to, during this time of social distancing, trying to be proactive and supportive of our members and the construction industry by creating programming and sharing relevant information regarding the pandemic and COVID-19. And we are doing this through both our website, CEA-CISP. We're doing it through emails as well as through webinars that we're having on a regular basis, 1 to 2 times per week. Again, if you have any questions, any concerns, or any information which you feel is good for CEA staff and or our industry and members to know, please feel free to share that information with Tim Linville, myself, Kent Kreitzer, or Courtney Smizer, so that we can provide connection and relevant content to our industry and to you. Today's webinar is around business continuity, and this week our Governor DeWine kind of restarted, if you will, and announced plans to restart our Ohio economy by opening up and creating at least a plan for opening up industries and sectors. And I think one of today's reasons and timing for the discussion around business continuity is to ensure that we can share information with you regarding ways to keep your business going during as well as after this disruption which COVID-19 has created. Hopefully each of you has received a PowerPoint that will be shared on the screen. Should you need a copy of that PowerPoint, feel free to contact myself or Courtney. You can email us, Glenn at CEA-CISP or Courtney at CEA-CISP, and we'll be glad to get that information to you. We've asked that all participants mute themselves. There continue to be opportunities for you to ask questions. There's a chat box feature that's located on the right side of your screen. It is a bubble, if you will, that will allow you to type in questions, by which I will share those with our presenters today. So again, I'd like to thank both Roger Gingrich and Dave for helping us, Dave Mustin for helping us with delivering content. And I will now turn this session over to Dave Mustin, who's a partner with Markham, formerly Skoda Minotti. And we really do appreciate, Dave, you and Roger and your firm's continued support and advancement of the industry.
Great. Good morning, everybody. This is actually, Glenn, this is Roger Gingrich. I was going to kick start it off just with some introductions this morning. So first, I want to applaud Construction Employers Association, Glenn Shoemate, Tim Linville, Courtney Smizer, as we've worked with them for a lot of years. CEA has done a tremendous job of keeping up with information and guidance, and I'm a believer in, if you sit through an hour of this, if you walk away with a couple of nuggets that can help business, whether it's survival or growth, those things are all key. And CEA has done a great job bringing a lot of thought leadership with a lot of topics around impact of COVID-19. So kudos to them. Thank you for the opportunity to talk today. For many of you know Skoda Minotti, our legacy firm. We are now part of Markham. In December, we merged in with Markham. One of our most significant parts of our practice is working with contractors, so we have a dedicated group. So many of you know us as that. So appreciate the opportunity today. We got a lot to cover, so my partner and colleague, Dave Mustin, is going to kick it off. The majority of the presentation today are these first 3 bullet points that you see in front of you. We're going to take a step back and just kind of define what are those potential causes of disruption. I think that this, if nothing else, this recent COVID-19's taught us that you almost have to plan for just about anything. So having some sort of plan in place and identifying how to address these types of things when they happen, give us a better bridge to get to the other side. So Dave's going to cover some approaches into business continuity and some action steps that we can all be thinking about that might help us get to the other side. I'm going to wrap up the discussion today, give a little high-level overview on the government stimulus, including some tax law changes that many people probably haven't been talking about, but the government stimulus with the payroll protection program, now we're in kind of this mode to try to get forgiveness. CA had a really good presentation last week on Friday. We're just going to highlight some of the things that are more of the uncertainty. So with that, there's a lot to cover. I'm going to introduce my partner, Dave Mustin. Dave works with our clients on growth strategies and business continuity, and today, all of his focus is working with clients staying in business and trying to figure out how to thrive and get through the current scenario where we are today. So Dave?
Thanks, Roger. I can't imagine a more pertinent and relevant topic right now. For the last 6 weeks or so, we've been all focused on what the impact of COVID-19 has been, what the loans and the financial sufficiency of these of our organizations look like. But now we're starting to turn towards recovery, and we're starting to think about what does it mean to come back out of this crisis that's going on. And the topics we're going to talk about is really focused on how do we make sure businesses make it through what's been the downturn and make it through this recovery. We don't necessarily believe that it's just a straight line recovery. We're going to throw the doors open and everyone's going to come back. And we want to talk about principles that we think will help you through that. But what I wanted to start out with was a discussion around some of the risks that occur in the world today that can affect a business. And while we're focused very tightly right now on this infectious disease event, there are many, many things that can disrupt business operations, that create a pause in business operations, that create potentially a shutdown. And it's really important to realize that these practices we're going to talk through today can be useful in any one of these kind of situations. In response to things like technological risks, I have a client that had hired a new IT leader a couple of years ago, and the third day on the job that he was there, they were hit with one of those ransomware viruses that totally took out their operations. It took them a week to recover their operations along the way and get things back up to normal status. So there are situations where there are long-term events, there are situations where there are short-term events, and there are situations where it is urgent and in the moment. And I know we aren't thinking about that right now, but over the last number of years, there have been many threats around active shooters and hostile threats. And we need to be aware that we don't know what's coming, we don't know when it's coming, but the important factor is to prepare for that and to understand that in the moment of crisis, we have options. And if we're prepared, we're far more likely to come through that crisis than if we're not prepared. Now, with all that being said, I would say that the region that we live in, from a weather, from a geography, overall is considered to be one of the safest in the country. We are not confronted on a regular basis with hurricanes. We are not confronted on a regular basis with energy fires, much as occurred on the West Coast in California a few years ago, although we did have that energy disaster back in 2003 where our power systems are shut down for about 3 or 4 days. So we're very lucky that from an environmental space, we tend to be luckier than most parts of the country. But things do happen along the way, and typically it is very important to be prepared for the things that may disrupt business operations. It is important to step back and understand what might be coming, and that we have action plans as leaders, as owners of our businesses, to know what to do. And oh, by the way, that we bring our leadership team with us, be that supervisors in the field, be that a controller in the office, be that a operational lead. We need to make sure that everyone understands what is the right thing to do so that when those moments of crisis hit, we can prepare and take the proper action along the way. Now, when we talk about business continuity, there are really 4 terms that I think are really, really important. And the first one is around, as I've mentioned, business continuity, and that's about how do we keep the business operating in moments of crisis. That means how do we service clients? How do we take care of our staff? How do we make sure that people understand what's happening and what the direction is? Particularly in moments of urgent crisis, such as an active shooter situation, it's important that there's clear direction to keep people safe and secure along the way. Now, you might have heard the term disaster recovery, which is not quite the same as business continuity. Disaster recovery is usually spoken in terms to getting IT operations back up and running and secure in the most urgent times. And that speaks to a number of different things. It's not just the computer systems, but they also speak to communications inside your organization and outside your organization. When we think of communications, if phone systems go out or walkie-talkie systems go out and you can no longer communicate to people in the field or across your offices or in multiple locations, you have people operating blindly and may not know what's going on around them. So it is important to keep all those systems, those computer systems, those communication systems working active. And in particular, word can travel very quickly and very slowly at the same time. And usually issues around disasters happen in the media very, very quickly through social media. They can happen in a second. And media outlets can find out about disasters quite often faster than staff in an organization can find out about them. So it's very important to understand what you'll do to make sure your phone systems, your walkie-talkie systems, your communications devices, your computers are up and running as quickly as possible, that you can communicate and continue to run your business. Now we're moving into a phase called business recovery right now, and as Glenn talked about, Governor DeWine is starting to open the state back up again. But he's doing it gradually in a multi-step process, and it's important that we think about those steps as well, and that we don't rush just to throw those doors open, but we take appropriate precautions, because unfortunately, the COVID-19 virus is still out there, and there are some people very susceptible to it, so we need to open up in a staged, phased fashion and make sure that our employees are safe and make sure that our customers and clients and the owners of the construction projects we may be working on are safe and insulated as well. And that coordination process is pretty important. The fourth term I want to touch upon is crisis communications. As I mentioned a moment ago, word travels very quickly in disaster situations, and particularly things like active shooter events or when there's a flood or a power outage. Word happens and travels in the media. The media is looking for that and is tracking on radios and various devices to understand what's happened. So it's important that you at least have a few clear messages about what you want to say in moments of crisis, so you can reassure staff, owners, clients, supply chain, and the greater community about what's happening. And if you've been affected, what do you want to tell the community about that going on? So it's just something to think about in terms of business continuity. So the first and most important thing we think about is to have a business continuity plan. What you see on the left side of the screen is a construction planning template. And in every construction project I know about, there's a plan. There is a discrete step-by-step plan of who's doing what, of when it's going to happen, who's responsible, who's accountable, what our deadlines are, and quite often fallback plans of how do you fall back in case something doesn't hit the way you want it to. Well, in the moments of a business crisis, we think it's very important to take that planning aspect and apply it to your business. What are the scenarios that you may run into? Now, COVID-19 is very unseen and unexpected along the way, but understanding that something like this might happen, what are the risks that would affect your business, and what are the reactions that you may have are really important, and making sure that your management team is aligned around that. I did a presentation recently about recessions, and recessions really about correcting economic practices in all businesses. And what happens, particularly contractors, business gets going very well. We hire staff and we can overhire at times. And a recession is about correcting that model. And so we know that recessions occur on average about every 4.5 years. So while it seems like we've been a long ways away from one, it's been about 10 or 11 years since the last one has happened, it certainly looks like we're in now. And the question is, on that scenario, what's your plan to stay economically viable? What's your plan to keep your staff relevant and to keep the right people on board and to work with them and to make sure your staff are fully employed along the way and busy? It's important to understand what those scenarios are. It's important to understand what the risks are, how you're going to respond, and make sure that you communicate with your key leaders in your organization on how to do that. And one of the things that's really important, I think, about is practicing and aligning your team. And I'm going to talk about what I call a tabletop exercise a little further in this presentation, but that's about practicing, communicating with your team, and making sure people are prepared and know what to do. Now, you've hopefully heard the term cash is king, and in this scenario, and what Roger's going to talk about a little bit further down, is the economic injury disaster loans by the SBA and the Paycheck Protection Program. You've hopefully heard a lot about those programs and applied for those. But one of the things that we think is really important is to have a 13-week rolling cash flow forecast. What that is you see an example of that on the left, is that for the next 13 weeks, which is really a quarter of the year, is you plan out what your revenue is coming in and what your expenses are going out. That should be focused on a cash in, cash out basis and not on an accrual basis. It's really focused on knowing when you might flip and have more cash going out than cash coming in, and hopefully be prepared as to how you're going to manage that. Do you accelerate accounts receivable wherever possible? Can you slow down paying suppliers and making sure you stay in a positive situation on a cash flow basis? In every single moment of a crisis and where there's a business continuity challenge, probably your second most important challenge after having a plan is to have a understanding of what your cash flow is, make sure you have appropriate cash to retain liquidity in the business. And the government has stepped in with those expanded lines of credit, the SBA loans, the Paycheck Protection loans. But it's important to remember those are just supplements to you running your business well and intelligently. It's very, very important to make sure you have a clear line of sight to what your cash position is, and you have the liquidity to stay in business, pay your employees, pay your suppliers, pay yourself, and make sure that you can stay liquid throughout this. And cash flow is an important determiner of businesses that stay in business or businesses that may not make it coming out of this. Now, in alignment with cash flow, we think managing your capital is incredibly important, both working capital and regular capital. If you have excess inventory, I think contractors for the most part are very, very good about managing inventory to a job and buying when it's necessary. But I do like to remind them that inventory purchases are especially important. Buy for the job that you're working on. If you can avoid buying for future jobs that you may or may not know are coming, just manage those inventory purchases very, very quickly. Buy for the day, not for the month of the quarter of the year. And as I'd say, limit any capital purchases. I know that we look for opportunities to buy large capital purchases and accrue those costs back to a job. But wherever there's an opportunity to potentially use a rental item rather than buying a large capital item at this point in moments of crisis and where there are unique financial times, we strongly encourage you to look at, make sure things are revenue and expense items, not asset and liability items. Try to limit those liabilities wherever possible. Try to make sure you can keep as much liquidity in the business as possible. And as we have mentioned already, we're taking advantage of the Paycheck Protection and the SBA loans wherever possible, do that. One suggestion I've worked with a number of clients on is if you have capital assets that you're not using actively right now, you may still need them in the future, but they're not actually creating a return for you right at the moment. If that's something that you can sell it to a bank or someone else, a lender, and then lease it back and turn that capital item into both a set of cash in your business, maybe an expense item. And that will further extend you.
Oh, good.
Yes. Hello?
Conference, yeah.
We think it's also really important to make sure you focus on your project owners, your clients at this point. One of the things that happens in the moments of crisis, we tend to hunker down. And we
Hey,
focus.
Glenn, this is Roger. Could you go back to the previous slide real quick? There's a point I wanted to mention here too, prior to that. So for a lot of contractors, and again, we work with a lot of them, that line of credit piece I think is very important right now. One of the reasons why the government is coming out with the payroll protection program is they understand that there's going to be a disruption with the COVID-19. Maybe projects get delayed. Most of us are essential. We're working right now. But to the extent that if we continue to try to maintain our payroll labor force in place, we don't want to lose good people. What inevitably happens during a slow period is we start to eat up resources, and yet we don't necessarily have revenues tied to them. So our lines of credits start to get tied up. Another way that lines of credits get tied up is using it to buy equipment and those various types of things. So the point is, take advantage of the payroll protection program loans, those things that are out there, because the whole point is, even if revenue doesn't necessarily long-term take a hit, if we can maintain our line of credit so that when business comes back, because what inevitably will happen, business will come back. But if we've been through a slow period where all of a sudden we've had maybe a little bit of loss, or some of our resources are eaten up, when we come back, a lot of times that's where businesses go out of business because they don't have the resources to take on this initiation of the reemergence of all this work. So I just thought it was important to point out, really protect your line of credits. We know bonding companies look at that, and having access to those are very key during this type of thing.
Thanks, Roger. And the one thing I'd add about that as you think about paycheck protection, if you haven't applied for that, please do it rapidly. The first set of loans that were established were consumed within about 13 days. And we expect this next round of funding, even though it's almost $500 billion, to go very quickly as well. So work with your banker or call us at Markham. We're happy to help you. But please try to get ahead of those lines of credit through the SBA and through your local banks to make sure you take advantage of that. So we were talking a moment ago about attending project owners. It's very easy to forget about your clients and not stay in close communication with them. What we tend to think about is that 80% of a lot of our clients' revenue comes from 20% of their projects and their work. And those are really, really important to stay in close contact to preserve that revenue and cash flow. What you also want to understand is, have their needs changed around projects and timing during the course of this crisis? Are they looking to slow things down? If they're doing a residential project, is that residential project slow down because they think that either people will not rent as quickly, or is it a school project and the school project's getting delayed and pushed out? If it's a hotel project, is that getting delayed? Because we certainly expect the hotel industry is one of the deepest industries being affected by all this stuff. So understanding how your owners are being affected by this crisis is really, really important. And understand how it affects your project timing and your commitments. And also, as it affects their timing and it affects your timing, it's important to go back and talk to banks about what it might mean from a lender perspective about covenants in any loans you may have and any financial liquidity you may have. So as you gather all this information, make sure you connect the dots. I mean, the critical players in your environment are your project owners, your employees, they are your contractors and supply chain, and your bankers. And you have to navigate it between all those players and understand how they affect your contractual requirements of the projects you have in motion and your upcoming projects as well. What I'd also say is that, unfortunately, we suspect that some organizations may not make it out of this. And as hard as that is to say, some organizations that don't have the cash liquidity or don't have the depth of projects to make it through this may be at risk. And we hate to say that, but where there are opportunities to secure new clients, new project, new opportunities, in every crisis, there are businesses that do really well coming out of this. And as we talk about recession-proof businesses, we certainly think grocery stores are probably doing better right now than many other businesses. We think that some contractors are going to do very, very well coming out of this business. It's important to understand where there are opportunities in the moment right now and where you can take advantage of it. Don't just hunker down into your office. Make sure you get out and look and see where there are opportunities coming out of this. We also think it's vitally important to attend to your field and your back office staff. It's very important to understand that you're taking care of all your staff, but we also know that every contractor has key people who are vital and critical. And you need to understand where they're at. They are at risk, both from a family perspective, from a health perspective. And what we want to make sure as an owner or as a leader in a contracting firm, that you understand what is affecting your staff. And you make sure you help them and attend to them. We know that people are being forced to work more at home with kids at home. We know that health issues are rising up. People are nervous. We will also say that we've had any number of conversations with clients where people have been put on unemployment, and for the moment, because they're afraid of the virus, they're choosing not to come back as these paycheck protection loans are being offered out. So stay in close contact with your staff, maintain clear communications both around their projects and themselves and their families, and understand if there are opportunities where people are working less hours right now, can you train them on new skills and opportunities? Can you train them on technology? Can you train them on new ways of working to attend to this coronavirus? Spend time on training on social distancing. Make sure your staff members, your field staff, your back office staff wearing masks. Governor DeWine here in Ohio has said that if you're not wearing a mask, you cannot go back into the field. You cannot go back into offices. You have to wear a mask. You have to social distance, or you can be cited coming out of that.
Dave, I was going to just chime in on a couple of things. One of the things, DeWine's actually backpedaled a little bit on that because he's gotten a little bit of resistance from constituents on the mask thing. So it'll be interesting to see how that develops. The other thing, a point that comes up quite a bit for us is, as we've been advising clients on the payroll protection loan, there are certain, we all know, and I'm sure there's folks on the call that have run into this, that even if work hasn't been delayed and you can get people back on a project, some employees might find it because of safety concerns and fears of the COVID-19 that they don't want to come back. Or in some situations, and I'm not saying for the union scale employees, that maybe are all the people that are on the call, but there's some situations where your folks are actually benefiting from the $600 stimulus with unemployment on a weekly basis. People should be mindful though, just because somebody doesn't want to come back, that would really constitute a place where their unemployment could become forfeited or disqualified. I think there's some unknowns out there that employers don't realize that, and it creates a kind of an awkward situation where you've got key employees, you don't want to disrupt it. It's just some tough things you have to kind of manage through when it comes to, what do you do in a situation when somebody doesn't want to come back to work, especially if you're trying to take advantage of the payroll protection loan and trying to get as much forgiveness as possible. So those are delicate situations.
Absolutely,
so, Roger, Roger and Dave, I mean, from your perspective of engaging with clients that may be business clients or, even more important to this audience, construction clients, I mean, if you have any perspectives of, best practices that or really are occurring and policies have been implemented, or concerns or questions, real live things that have come up. I know, Roger, you and I talked before about kind of the taking stimulus dollars, which requires, full employment, right, of a work staff, based on the last 12 months. And that there may be situations that occur that, there's not work to kind of do that. And so there becomes a philosophical decision, business decision that one has to make, which you can probably speak to more in your part of the presentation. But even as we talk about business continuity and some of the things that, I guess Dave is taking us through, any other, practical examples of clients that you served and had involvement with here recently?
Right. I'll give one, and ask that Dave can chime in as well. And this is not a construction-related example, but it does kind of get into the payroll protection and loan, and whether not 100% of every business it made sense to go get that loan. And I've worked in the case where we're working with a business that's fully shut down. So in this case, we'll use an example, a restaurant where you're not even offering catering. These small restaurant clients that don't have a lot of capital behind them, all of a sudden, if they go and bring people back to work because they want to take advantage of this payroll protection program, well, it's going to cover most of their payroll costs, but it's not covering FICA and Medicare match. It's not covering federal unemployment or workers' comp. And if your rents and utilities, depending on what those costs are, if that's not enough to offset the additional cost and administration of bringing payroll back, you could actually put yourself in a worse situation. So one of the things we should always look at is if you're partially or fully closed down at this point, it may not have made sense to bring people back just to try to take advantage of this. There's some economics behind it, but then there's also the people side of it as well. And on the inverse of that, in situations where we've heard of situations where maybe an employee doesn't want to come back, maybe it's because somebody's got to stay at home with the kids and the other spouse's job dictates that they continue to work. You run into some challenges, and it really comes down to this: managing your people. If you've got good people, you might bring them back and you would have them basically on payroll, yet they're not working. That's what this payroll protection program was designed to encourage you to pay people even if you didn't have things for them to do. And so you have that ability, and it does create some sort of, moral or philosophical discussion around it, but there's things here that you really kind of have to vet through. And if you've got a key employee, you don't want to turn good employees away. It wasn't a month and a half, 2 months ago, we were all struggling to find a good enough amount of skilled workers. So it does create some challenges, Glenn. And I've seen, you just really got to talk through all of these things.
Sure.
Absolutely. One of the things that this isn't also a field office or field staff issue, it's more of an office staff. In the announcement that Governor DeWine did yesterday about opening offices back up, there is a requirement that there's no more than 50% of the people in the building based on the max fire code for occupancy rates. So if you're allowed 100 people in your office, as a fire code regulation, you're only allowed under these new requirements to bring up to 50 people in your office. So it changes our ability to work. I think part of it is the opportunity where we can still work at home and smooth that reentrance back into the office. I think that's really, really important to think about.
And so the other, and we talk about guidance being given by the governor and federal government and SBA and others regarding programs, and CA tries to, on a daily basis, maintain and update our COVID-19 website with policies at all levels that regarding, guidance or policies, programs, and opportunities. Yesterday, the state reversed itself a few different times about face coverings. And my understanding is that the current guidance says that all employees, regardless of industry, so not just construction, must wear face coverings unless directed otherwise by a medical professional. Now that is what we feel is the latest industry information that is updated on our website. So you can find that on the CACSP COVID-19 resource page. And so we're trying to provide, as a lot of other professionals, Markham and others, the most recent and our understanding of what the guidance is. And so for us, it's not the interpretation, but it's actually sharing the memos and documents from the, in this case, state of Ohio. So we should certainly encourage everyone to pay attention to not just our website, but, the state of Ohio and any other sources that you may be able to find this type of current information.
Thanks, Glenn. Really, really important.
Sure. And it does create confusion, back and forth. But again, we're doing our best as we're going through this together to CEA as to make sure that we're maintaining daily updates, given any information that's relevant to the construction industry and our members.
Yep. Very, very important. So much like we need to talk to our clients and owners around the projects we have taken on, we need to spend a lot of time focusing on the supply chain. And it's been disrupted from the international supply chain about what's going to come and when it's going to come, but even domestic suppliers, because of reduced working capacity, might have delays in being able to deliver critical supplies, and capacity and orders may take longer than we anticipate to get materials for a project. So much like we manage those owners' clients, it's very important to stay in close communication with your supply chain. And the risk is that some suppliers may not ultimately make it. And the more you can find out about their own financial sufficiency and understand what position they are to deliver products and materials on a timely basis is critically important to have that proactive communications with them around status of orders and make sure you can get it when you need it, especially if a project deadline is shifting because an owner shifts what their needs are going forward. So talk to your supply chain.
Dave, I would like to chime in real quick on that as well, because specifically for contractors here, we all know that we're governed by contracts, and those contracts, when it comes to labor and getting the work done and also materials, that responsibility most times often falls on the contractor performing the work. So in cases right now that we're not able to get access to materials, or the materials we're getting, there's price escalations, there's a question, can we get a change order for this stuff? And we know we've all been down that path as to the ability to mitigate your risk in that case. I would tell you, probably going into this COVID-19, based on where contracts are, I'm guessing there's going to be a lot of this is going to fall on us as contractors, and there's going to be probably litigation to help try to mitigate, offset some of the impact of that. But even on a go forward basis, as we think through contracts, this is where working with legal counsel and project management and really starting to figure out how that's going to be handled. Because that force majeure, everybody's heard that term now. A lot of that stuff, is that contract, are we going to be able to put something like that in a contract going forward? May or may not. Maybe I don't get the job if I do, but those are clearly things that are, I think the supply chain is a huge issue that's going to be interesting to see how it develops over the next several months as we come out of COVID-19.
Yep. And we can't assume that even if demand ramps up quickly on the front end, there are more projects taking off, that supply chain will be able to respond and meet that demand coming forward. So it's going to be a very uneven reentry and back to normal operations, whatever normal may mean. So it's important also to focus on sales and marketing, estimating new projects, new opportunities. It's important to stay in front of your key owners and customers. Communication, understanding what your value and proposition is. If you're still working and you're working at full capacity, make sure your clients know that, and make sure that you're there for them, that you can produce, that you can deliver on your projects on a timely basis, because there may be opportunities for them to shift work from other underperforming contractors to you. We don't know what this is bringing. This is new and unique times, and it's very important to understand what the opportunities are and where there's a possibility to take advantage of that. I've seen a number of clients wanting to shift to more technology-based use in sales and estimation, and where you can use software for estimation, where you can use collaborative tools and conferencing tools. I've got clients that are trying to video conference using Zoom with clients, which is new for them. They like to do in-person sales and discussions. And so taking the time to make sure your sales and estimators have clear access to those tools, they know how to use them, they're proficient on them, and they can have those face-to-face conversation is really, really important. Sales and estimator people quite often like to see who they're talking to on a regular basis. Zoom and other tools like that provide that opportunity. Take the opportunity to help your salespeople, your estimating people, your marketing people get proficient in those kind of tool sets, right? And we know that some parts of the client base may be troubled right now. I talked about schools, I talked about hotels. Where else are there opportunities for construction projects that may be recession resistant, and where you can reposition and create new opportunities and new services in the marketplace for that, take advantage of that to create more robust growth opportunities is a positive. Look for those. Not every crisis is a downturn for all businesses. Look for opportunities where you can grow and succeed in new and different ways. And the last key point I want to make here is It seems odd that we've tried to create a dashboard and indicators about what drives your business, but if you don't have a dashboard, understanding what your position is around revenue, around backlog, around margin, even that 13-week rolling cash flow forecast, take the opportunity to start asking your controller, your finance lead, to start building this dashboard to give you insight. You don't want to get surprised. And those early warning indicators, such as backlog actually, can give you a good insight as to what's coming, especially if projects get delayed. You need to understand how cash flow is coming in, how cash is going out, and understand those critical indicators and where you can build a dashboard, some simple tools using Excel and some simple visualization tools. It's really, really important now to take this opportunity to understand and not wait till it's happened to you, but be able to anticipate it before it happens and take corrective action early on. So I talked about a practice session, and that's what I would consider a tabletop exercise to be. What a tabletop exercise is getting your key leadership team and your management team into a room, whether it's 2 or 3 people, whether it's 5 to 7 or 10 people, whatever that number is to talk through, here are some scenarios that could happen to us. And if that scenario happens, here's how we're going to respond. And here's the action steps we're going to take. How do we communicate to field staff? How do we communicate to office staff? What's our response to that? Are we in a position to weather through some of these ups and downs, these turns? Now, again, the COVID-19 was totally unforeseen. If you asked us, any of us 3 months ago, if we're going to be in lockdown mode now, not a single person would have said yes. But anticipating that there's short-term, immediate term or longer term responses and disruptions occur, and being prepared for that and aligning your team around that is really, really important. We have some templates that could help you with that. If you'd like, we'll give you our contact information in a few minutes, and you can reach out to either Roger or myself. We're happy to provide that to you. But we do think it's important to practice, and that's what a tabletop exercise is to align your team and practice that. Now, with that said, I'd like to turn it over to Roger and talk more about the SBA loans and the Paycheck Protection.
Thanks, Dave. So for many of you on the call, I'm pretty certain that if not all, almost the vast majority have gone through this exercise with the payroll protection loan and the EIDL and trying to figure out what makes the most sense. This is just a quick summary slide as to where we've been and where we are today. We know the most recent, on April 24th, they came out with additional relief, including $310 billion earmarked towards the payroll protection program, $60 billion of which went to small business lenders, community banks, and credit unions. There was clearly a good amount of small businesses that were neglected or shut out the first go around, and that would hopefully, this next wave, make sure that everybody's in line to take advantage of the medicine that we all need to be able to get through these next several weeks. With that said, the EIDL loan, the only comments I'm going to mention today about that one, there was an additional $60 billion of relief towards this loan. This is one you have to pay back. It's got 3.75% interest. It's got up to a 30-year payback, but you had to demonstrate some sort of economic impact as a result of the COVID-19, and you also have to show some ability to repay. This is directly with the SBA. One key thing here, as of this morning, the SBA's website, they were not still accepting applications for this next $60 billion. There's a little bit of people are making some assumptions. Is that a fact that because by the time they spend the first wave of all the loans that are already in the queue, that they might even spend through this $60 billion? That's not confirmed, but that's some of the chatter that we're hearing out there. So know that this loan's out there. If you got it early, from anywhere from the end of January through April 3rd, when the initial proceeds or if the initial payroll protection program application became live, if you got this loan first and realized the benefits of the payroll protection were better, you had the ability to refinance that EIDL loan into the payroll protection program loan. So some of you on the call might be experiencing that at this point. There was also a grant piece of it as well. So with that said, yeah, feel free, Dave, go ahead and move to the next slide. All right, here's where kind of like the fun, or maybe it's not so much fun, begins. Now that the government made it very clear that they needed to get the cash out there immediately. So as you can imagine, trying to put something like this together as swift and nimble as the government did, it creates questions on the back end. And those questions, even as of today, even though this loan, the application was being accepted as of April 3rd, we still don't have clear direction on several of these things. So we're going to highlight a few of these, kind of point out where the potential landmines might be, and some maybe strategies as to what you want to do to make sure you can try to get as much of this forgivable as possible, because that's where we are today. How do we get this loan forgivable? The SBA came out with an interim final rule that was published on April 2nd, 2020. You can find it on the website of the Treasury. And in that rule, the one thing they made clear is that more rules are to follow. That was actually put in bold inside of that particular document. To this day, outside of responses to frequently asked questions, the most recent of which was as of yesterday, there was some additional guidance on some of the frequently asked questions, but they have not given clear guidance specifically on this first one. To me, this is the biggest unknown that's out there. The rule says that at least 75% of the payroll protection loan proceeds shall be used for payroll costs. Well, we get that. We know if we spend the money, we've got to spend at least 75% on payroll, and these other costs, whether it be rents, mortgage interest, and utilities, those cannot exceed 25% without some sort of elimination or reduction in the forgiveness piece. That makes sense to us. But when we applied for this loan, and we've had several contractors and or businesses in general we've talked to, when you applied for the loan, you used a trailing 12 months or a 2019 set of numbers that said, here's what our payroll was a year ago, and based on that, we qualify for 2.5 times of a loan. Well, outside of COVID-19, there might be other reasons today. Construction is a very project-driven industry and business that we're all in. And so if today going into it, we don't have that type of payroll in line, what happens if I get $1 million loan and I spend $700,000 total of the loan proceeds, and of that 700,000, I meet the 75-25 test as far as payroll costs versus these other costs, yet I didn't hit 750. There is no concrete certainty today that this becomes an issue of a cliff. Does that mean the full $700,000 that I spent, and in addition to $300,000 that I didn't spend, all of it becomes due? Or can I at least get that partial forgiveness for the piece that I did spend? I would like to tell you, and I believe in my heart of hearts, that the answer is going to be we will get partial forgiveness for that. But as I've advised clients over the last several weeks on this matter, we don't have 100% clear guidance. It's the biggest question we have out there. And to me, what I'm advising clients is make sure you're showing that you've tried in every sense to meet this standard, knowing that you still got to operate a business smart and nimble as best you can. So know that that's still out there. We know that this spend occurs at the date of the loan proceeds. So if you got the loan on last Friday, go out 8 weeks, you're spending your payroll immediately. The question that comes up is, hey, what can I include in there? Some people are like, can I speed up bringing certain expenses that maybe I incur at the end of the year and bring it up into this 8 weeks, including bonuses and things like that? Well, the one thing that is clear in the interim rules that they came out with is that the expense has to be incurred and paid. For us as accountants, to me, I interpret incurred, meaning that you've actually accrued it. It's a cost that the business actually had occurred during a certain point in time. It's already happened. And on top of it, if it's incurred and we pay it, then it's going to qualify in this 8-week spend period. An example might be, you got a lease contract that's in place to pay rent for your facility. By the way, that contract had to be in place by February 15th, 2020. What the government didn't want is people going out and creating all these new lease arrangements post February 15th so they can just get some, start spending money. Who knows? People get creative these times of year. But with that said, if your lease contract says you pay lease your rent once a month on this day, it's due, and so the question would have been brought up. Well, my period's all the way through June 10th. Can I pay? What rent's going to be included in there? And I would tell you that, well, clearly your rent through May is going to be included in there because you've already incurred it. But you got to make sure you pay it during that period of time. Well, what about paying June's rent? Well, I would argue at a minimum, you should be able to get 2 months worth of rent in there. Some people, we all know we probably pay that rent on the front end of each month. So if I only have that 1 month in there, I'm definitely going to make an argument that in 8 weeks, there's 2 months of activity we're incurring. So we should be able to pay that and incur it and be able to get forgiveness for it. But if we're talking about July's rent going forward, which we haven't incurred, that's where I believe the SBA, or in this case, in banks as they go through and certify this, will probably disallow that. We already mentioned the payroll cost has to be 75% or greater of the spend. We know those items. I'm sure there's everybody's pretty clear on this. Gross wages, your Social Security wages, state unemployment, health and retirement benefits. We know a lot of that for us on the call, that falls in your union fringe benefit package. Take a good look at that. In most cases, I found talking with contractors, most if not all of their fringes are going to be covered, but you might run into some dues and some various other incidentals that might not be considered part of that. You just want to make sure you're double checking and looking over that stuff. Where's the other place people can get tripped up? And it's on this, a couple other places where forgiveness can be reduced. And one is this point of a head count. And interestingly enough, here we are today, it's April 29th, and we're several weeks after, at least 3-4 weeks after the applications have been starting to be accepted, and they haven't defined what a full-time equivalent is. So if I'm working with a contractor today and I'm trying to figure out what's my denominator, the government wants to know what was your labor force going into COVID-19. So and they give us the periods of which we're supposed to be looking at as far as defining, hey, a year ago from February to June of 2019, I had 10 full-time equivalents on staff, so that's my denominator. But how do you define it? That's the question that we're asking. Are we taking our total hours, dividing it by 30 or 40? When it was the Affordable Care Act, the Obamacare program that came out several years ago, 30 hours was deemed what somebody was eligible for benefits. But is it 30, is it 40? We don't really know that. So right now we're kind of guessing as to what the denominator and numerator definition of full-time equivalent is. But we know this, during this period of 8 weeks, if we are at a fraction of what our denominator calculation, our base period is, so we have less people that are working today, we're potentially, let's say 8 out of 10 full-time equivalents by the time we get through it. That means we're 80% of the costs are going to be eligible for forgiveness. However, there is some relief on this. The government is also saying once you get past that 8-week period, but you get to June 30th, this point in time, if you restore that number, even though you didn't have it during that 8 weeks, you can get yourself out of this reduction calculation. But just keep in mind, if we didn't have them during the period of 8 weeks while we were working, we're probably still going to run into a scenario where we're not going to get full forgiveness because we weren't spending the money at that same point in time. So something important to point out. Dave, you can go ahead and go to the next slide. All right, so one of the other tests too is if in some cases, I'm sorry, previous slide, Dave. Thank you. In some cases, the strategy could have been, hey, we're all in this together. Let's go across the board, across our organization. And again, it might not be when you have collective bargaining agreements, it might not be our field people, maybe it's our office people. But we might say we're going to take a 30% pay cut during this period of time across the board. This payroll protection loan program would tell you during those 8 weeks, if you're paying people at a reduced pay of 30%, which is greater than 25, and these are for people that are making under $100,000 a year, that differential, the amount that you go above, will not be eligible for forgiveness. However, again, if you restore their pay by the end of that period, you get the same relief in this particular case as well. So people should be mindful that those things are out there. So a lot of uncertainty and question in some of this stuff. It's important to pay attention to. I would hope that we would get some more clarity from the Treasury and the SBA here shortly. And that would certainly help all of us do a better job managing and figuring out how we can maximize this forgiveness. It's important to note that the forgiveness is also not includable in gross income, so we should not be paying tax on it. Clearly, it could get us to a better place potentially even than had a COVID-19 not even occurred. But the whole intent is, again, to try to keep businesses from eating up their line of credits so that when time comes back, they're ready to operate at full strength. All right, a couple other things, and then we can start to wrap up here. But we all know that when it comes to, when the 8 weeks is up, there's no timetable to turn over to your lenders the audit support that they're going to need to certify that you appropriately spent the money and met all the tests. But we're encouraging people that I would turn that over as soon as possible. We're advising clients that every time you write a bill that, or pay a check or pay a bill that meets the standards of what is forgivable, pull the backup together while you're doing it. Don't make it an exercise you have to go back and create 8 weeks. Do it while you're going along. Keep tracking in Excel or use a separate bank account, all of those things. But once the bank gets the information, they got 60 days to turn around and come back and certify what is forgivable. So that's key. It's going to be very interesting. Banks aren't always wired to be auditors, and what their resources may be. It's going to be kind of an interesting time to see how that process will go. But I encourage you to do that sooner than later so you can get the forgiveness and figure out where you stand in that. And to the extent we do get forgiveness, it's not only forgiveness on the loan, but also the 1% interest that's going to accrue from the date you get the disbursement all the way up until the time that the bank certifies it. Any amount outside
Roger,
of that, yeah.
Yeah, one question. If someone doesn't get their loan, say, until mid-May, they still have 8 weeks after that, even if it kind of goes into July. Is that correct?
Boy, that's a really good question. I know the SBA requires that once the loan is approved, that the bank has to get the money out to the client or the business sooner than later. In fact, the government's bigger concern was trying to delay getting the money because you don't have maybe people working and you're trying to time everything the right way. And they came back and said you can only get one loan and it's required to be dispersed in a certain case. I'm not answering Carmen's question, but I'm happy to look into it and get back to her. If we're going to run into a situation, you're going to get it mid-May, which would take you past July, because it's up through the period June 30th is the way I understand it. So I'm happy, Glenn, to get back and get back to you and Carmen on that question.
Okay, thank you.
Yeah. So again, pull all your reports, records together, pull lease contracts, pull all that stuff so it's an easy exercise. Make the job of the lender as easy as possible, given all the stuff that they have going on. The last thing I'll mention here is the potential penalties for misuse of the payroll protection loan proceeds. We know a week ago, SBA or Treasury came out and I think even President Trump made comments to this, whether it was Shake Shack or it was Harvard or any of these large institutions, public companies that have complete access to a lot of unlimited credit in a lot of ways, that if they were applying for this, that's not what the intention was. So there was this grace period to May 7th that they could revoke or pull their application, and a lot of businesses have since done that. Even as of yesterday, they even further clarified it to say that's not just for large companies, that's also for private companies as well. So just know that that's out there, that the government wants to make sure that you truly have some uncertainty. But I will tell you, in most instances, the companies that are on this call, the companies that we're working with, inevitably, I think in most cases that we don't have access to unlimited capital when you're not a public company. And you're going to be in a position where you need this because of the uncertainty of jobs and being delayed and everything. So know that the potential penalty piece is out there. All right, Dave, you can go to the next slide. I am not going to go through these in detail for the sake of time. We're at 1 o'clock. I want to cover one more slide here, but this is in the materials, so feel free if you want to request Glenn and you have questions on the retirement relief and or the rebate program, it's there. This is kind of key, and if you're a contractor and weren't aware of this, part of the tax provisions under the CARE Act that created an interest-free loan basically for the employer match of your FICA expense to 6.2% from the period of March 27th through December 31st. Your share of the match, when you go to file your 941s, you have this ability to defer paying that for the rest of this year from that point on. and then the payback would be due in 2 installments by December 31st of 2021 and December 31st of 2022. The reason I mention this, when they first came out with this ruling along with the payroll protection loan, the initial thought was you were not eligible for the payroll to be able to do both. And what they've since come, the governmentship has since come back and gave more clarity around that. From the time between March 27th all the way up until a bank forgives it and certifies it and says, here's what's forgiven, you actually are eligible to take that amount of employer match and defer it and not pay it in until and follow this. Now, once you get certified what's forgiven, going forward, between now and the rest of the year, you no longer are eligible to defer any additional employer match. So look at it as an interest-free loan, but clearly you want to set aside reserves to make sure you meet those outstanding obligations as they come due within the next couple of years. I'm not going to spend a lot of time on the last piece there. So we're that 50% credit is not, you're not eligible if you took the payroll protection program.
Oops. Sorry, Roger.
No, that's okay. And but I do want to mention the NOL carryback. So in cases, if you were a business in 2018 and you had a loss during that year, under the 2017 tax reform that became in place in 2018, losses could no longer be carried back starting in 18. You couldn't take a loss of $100,000. And let's think of our flow-through entities. If you're S corps and partnerships and you took good, strong tax strategies that helped you create a $100,000 tax loss on your personal return, and it ate up all your income, and you still have $100,000 left. You had the ability in prior years, you could take that $100,000 back 2 years and get money from profitable years. Well, now what the government's come in and done here is they said now going back to 2018, you are now eligible to carry the loss back. And by the way, you can go back 5 years. We actually have put down tax returns for 19 for a handful of our clients that they met this test. And we have now since filed for loss carrybacks to go and get money back that can help their business during a more difficult time now by doing the loss carryback. So know that that's available. Glenn, I'm sorry, Dave, there you go. All right, so a couple other considerations, and knowing that we're up against time, I'll briefly go through these. We work with lenders. If you haven't already, you can still get the payroll protection loan. Banks have to protect their customers. They know that they want to get ultimately their loans repaid in the future, and the best thing that they can do is offer deferment options, interest only, reduced fees. Those types of things are out there. If you're a large contractor and you weren't able to take advantage of the payroll protection program, or even if you did take advantage of the payroll protection program, you're still eligible for this Main Street lending program. We are supposed to get more information on this by the end of the week. The only thing I want to point out to the audience today is it's a minimum loan of $1 million. So if you're a small business contractor, most of us, we're not going to take advantage of something like that. But to the extent we have talked and worked with a few companies that didn't meet the payroll protection program loan that are larger, and we focused on the payroll deferral program as far as payroll taxes and working with lenders because the Federal Reserve Bank is going to be part of what is going to oversee this. They're just accepting commentary on it right now, but there's loans that are going to be available that with favorable terms. I think the business interruption's probably been covered in previous CEA presentations, but clearly talk to your insurance agents if you haven't. Most cases, we don't think it's going to cover a virus like this, but we've also seen attorneys also looking at it as a potential class action lawsuit. They're out there trying to challenge some of these contracts as to whether there is some relief under there. Great news for all of Ohio business owners with payroll. If you haven't already, I bet you within the next day or two, you will be receiving your refund checks from the BWC, which will go a long way to helping companies help weather this storm. That's all we got for today. If there's any additional questions, please feel free to reach out to Dave Mustin or myself or through Glenn. We're happy to help, and I appreciate everybody's attendance today.
Well, Dave and Roger, really, again, appreciate your sharing very insightful comments and insights, thoughts today. And I hope that the audience that was on the call also found it very useful. There's a lot to consider both around PPL as well as the business continuity and considerations. Everyone should have received the PowerPoint presentation that we went through today. Again, if you need a copy of it, feel free to reach out to Courtney or I to do that. I know earlier in the conversation, Dave talked about operational risk, and one of those is technology. And relative to technology, next week, we are actually having a cybersecurity session that might be of interest to many of you as we consider the fact that many, we have a lot of staff that are working remotely, and their home systems, my home system, may not be as secure as your office setting. There have been contractors here in the Cleveland marketplace that have had ransomware and, you know, probably theft from their organization, from their website, and they're, you know, had their website held hostage. And I mean, a couple of CEA members and several throughout greater Cleveland and certainly throughout the country. So next week's cybersecurity session with attorneys from Franz Ward as well as Oswald, cybersecurity specialists. We'll be talking about things that we all can do to keep our data protected, as well as some of the contractual reporting requirements that are required by the government. So would encourage you to consider that. The webinar after that on May 13th will be about documenting and prosecuting COVID-19 claims. We can probably anticipate that there will be some legal challenges or things that we need to process, and so that may be a good one for contractors. And again, would ask that if there are other webinars, other questions that are needed, or website, you know, or webinar sessions, feel free to reach out to us, let us know. You know, one thing that, again, Dave brought up earlier was around employee communications and crisis communications. That is a topic that I think we have trying to develop, you know, sort of for employee considerations and how to best communicate with employees, with clients, with vendors, and also consider that, you know, as people, we all have concerns around our own safety. And, you know, at the end of the day, start of the day, I think the human resource part of our business is a critical part. And so whatever we can do to shore that up and shore up, you know, communications and let them know that, you know, they're vital and important part of your business will be helpful. So thank everyone for participating today. Roger, Dave, once again, thank you. And if anyone has any further questions about the topic, I'm sure that Roger or Dave will be glad to respond. You can email me and I'll, you know, connect you to them directly. Their information was inside the PowerPoint of how to reach them as well. And again, if there are any other topics of interest, let us know. Everyone have a great day, and thank you.